What's good? What's good? I want to go over. I just want to go over right now. My trading, not in general, but more technical because I've done a lot of different things in terms of trading this year, and I don't want to let it get away from me. Because it's so easy to move on to the next thing, and I'm leaving a lot of stuff in the dust sometimes, and I think it's good to recap what I was doing. So at the start of the year, I believe I was doing um, zones, so chart formations that I think are my own setups, and I still remember them all. And yeah, it was a lot of discretion, and it was not no algorithm whatsoever. Um, so yeah, I don't really have much comment on that. I mean, it was just I think there's a lot of different ways to trade, and it wasn't working with me. Um, and a lot of it is behavioral, but a lot of it is because you select the zone yourself and like you do all the work and you have more emphasis on that trade, in and therefore it hurts more when you lose, and then it's easier to go on tilt when you do lose. So I drifted a little bit less discretion. I moved into increments and in the springtime, I believe. I don't know exactly, but the springtime, I created an increment model on the market, and it basically is just splitting the market up into sections, lines on the chart, and just seeing how it goes from point to point. And sometimes it can go from up, up, down. So that went 4 times, and you technically can trail your stop during that time. And if you can trail your stop, you can technically add to your position and still risk the same amount. And I got into that saying like, well, if I can do that, I can have a risk of 1 and make 7. I can have a risk of 1 and make 15 if it goes 4R. Yeah, you can. I mean, and you just keep on doubling your size every single movement it makes in your direction. So there is ways to do it, and I looked at the math behind it, and then I looked at the data, and what I found is that the data and the math show that there is zero edge, almost zero edge, to doing it all the time. And then I've been hunting since then, pretty much all year long. I've been hunting for times when I should trail my stop and add to my winner like that, or when I should do the opposite of trail my target and add to my loser and double down on losing, because there are times when that's profitable, you know. And I haven't been successful. I haven't found real a real consensus to when to do that. The data seems very random, bro. I mean, it's insane. It's a mess out there, bro. In my opinion, I mean, I'm trying to get better at summarizing data and stuff, and I've done it a lot of different ways now. I've changed the axis to time based, which is normally we think in time, but then I changed it to increment based, where I'm not summarizing data in the past that half an hour, how many increments it went. No, I'm looking at the past 25 increments, how much time has been. So I switched the axis around, and multiple times, and it's not just increment, it's range as well. You can do a range. You know, how many increments did it take to go 10 10 increments of range? And sometimes it's like 40, 50, 60 increments to go 10. I don't know. No, it's probably not that much. But I got to look again. There's just a lot. I'm just saying that there's a lot that can happen within a little range. It's actually amazing how much sideways movement there is sometimes. So it's just, long story short, that's what I've been doing. And then another thing is, when I investigate when to trail my stop and when to, add to my winner, when can I do that, or in terms of increments. And I've investigated different ways to do that, like a never returns system, which is when you don't trail your stop ever. You just get in and you have a breakout box, and if it goes up, you buy the high and just let it go. Oh, it goes lower, you sell short, and you just hold the breakout box, just hold it. And sometimes it can go 15 away. It can just leave, because the breakout box, our increments are like 10 points on the NASDAQ. Very small. Very small. So like if you try to condense the NASDAQ in 10 points, you better not go away from these 10 points. I mean, you're not going to have a good time, because the NASDAQ will move far away from that 10 point zone, that region. At some point it will. So I've been researching that as well. And there I found that there's so much failure rate. There's so long that it can just lose. It can go sideways. Like today there was a zone. If on the NASDAQ, if you look at today in the afternoon, I don't know what day it is, 11:11. Yep, 11:11. It was insane. All right. The market was moving sideways on this 10, 15 point zone. Okay. And it went 15 times in between it. 15 times back and forth. And I'm like, and I looked at the data, and the data, at most, it went 31 time in 3,000 different zones that I looked. It went 30 once. And then the next one before that was 19. And then there's a few in 15s, meaning the market can go sideways through one specific zone before breaking out. Okay, before moving, it can go sideways, 15 times. So this one was at 15, and I'm like, it's way more likely to break out of it. And I did the research, and the math shows that it is more profitable to bet on it breaking at that point, because it's already done that so much. It went 25. And now it's finally breaking out in the overnight. It's just so frustrating. I can't find a way to grab hold of the market. The market, even when it's due, things can still go on. It's just not constructive enough. It's not malleable enough. It's not predictable to the degree we need it to be. And at this point, so it's really difficult. And then through my research in this, I have also experimented in a ton of different position sizing methodologies. I'm talking a campaign on the day where I'm a discretionary trader, using my increment levels, and I have a risk of, let's say, 10R on the day. And if I go up and I just I use my day as my trail stop, or like as my trade. My trade is my day. I have a bunch of little trades, but my trade is my day. I'm a day trader. And I thought that was funny. And I think that's cool. I still think that's cool for discretion. But sometimes it's just really hard to handle discretion, I've found, and I'd rather do algorithmic. I don't want to choose. It's like fun to choose what to do, and I think it's flexible, it's robust, and you can really actually move your account a lot, and you can move it higher when you're doing good and stuff. And I like that part of discretion, and I like how flexible it is. I like the freedom. I'm a freedom guy. I freaking love freedom. Freedom of expression, freedom of doing things the way you want it to be. I like that individual nature of discretionary trading. But there's just, I've gotten to a point where it's so much of a headache. It's so much of a headache to trade. And I'm like, I love trading, bro. I've spent so much hours of my life trading. And I can tell you from my experience is that trading is stressful. Trading is babysitting. Trading is headache. I don't get headaches. I rarely ever get a headache. I'm just saying headache, just a head case, I should say. Trading is just a nightmare sometimes. And it's just so stressful. It's just so annoying. The market just today. I was trying to, do my system, and my target's at 0.50, and it goes to 0.50 and then rips. And I'm like, bro, you were on my tick. You did not fill me. You didn't fill me, and it left. It literally, all it had to do was fill me, yet it goes $1,000 in the opposite direction. Those kind of things just, you can't get around that. It just sucks. It just sucks. Trading, that part of trading, that is trading. That sucks. In discretionary, you're going to see that every day. All the time, bro. You're going to see that at least once a week. I don't know. Depends on your frequency, of course, but it's just freaking nuts, dude. It's just why? I just don't like it. I don't want that. I don't want to choose my zones. I don't want to do anything. I don't want to choose that. And the reason being is that because it's just it's a mess sometimes. It's a mess. So the idea is that I'd rather have the algorithm do it for me. Okay? It's for sure. That's for sure what I'd like to do. It's just easier mentally. Like I said, you're not gonna get that because you can look at the algo. You might not even need to look at the algo. You can go read a book. You can go work out. You can go do things. Like, you're gonna look back, and we're gonna do the homework. Nothing good is gonna come out of being lazy and like, oh, I turn on my black box algo and it does it for me. No, and I think algo trading might be harder work than discretionary trading. It may be. But in terms of the actual trading, you let the robot take the emotional damage. Okay? That's the idea. And I shield myself from that by just having the algo do it for me. That is probably the way to trade. Probably. Now, if we're going to have an algo do it, that's the hardest part. I can tell you right now, I have a few algos. I don't know why I'm not that confident in them. Some of them showing success, but it's just not up to my standard yet. It's nothing. I haven't found what I'm really wanting. So there's been a lot this year. And I wanted to tell you that and, tell myself that. And there's so much with position sizing that I'm seeing with martingale, with adding after winning and when to do which. If you have a strategy of risking 1 to make 7, is it better to, add size after losing so much times in a row, meaning because we're probably going to get the win eventually? Or is it better to decrease size when you're losing? And it's not about, obviously your account, it matters about your account value, but I don't think we're the position sizing we have shouldn't affect the account balance that freaking much to where you literally have to change size because your account is drained like that. We have way less size. So whatever. So there's different ways to do it is what I'm saying. And I'm just looking at all of the different ways. And eventually I'll tell you my plan is to have, I'm not sure if it's going to be a big group of algos or just one solid higher frequency algo that does the trading. I'm not sure yet. I'd prefer one system because I'm running a system for my dad right now. He has one system. He cares a lot about this one system. And I'm doing all these different things, all these different systems, all these different models on the market, just crazy amounts of shit, to be honest. And I like the simplicity of him just worrying about one system. I kind of like that. I'm like, he's like, how the algo did great today. I'm like, the algo. I'm like, and I have freaking many algos, many things, and I just like the simplicity. I strive to be in that position at one point in my life. I want to just have that simplicity. So I'm looking at just having one algo. If it's going to be one, it's going to be high frequency. I can tell you that. I'm not waiting a fucking month for a trade. I'm just not doing that. And I can tell you that one thing I have found is that higher frequency, there's no difference in the rate of predictability from lower frequency to higher frequency. From what I've seen. Although I'm not on that higher, I'm not like massive higher frequency, such as like 500 points on the NASDAQ or something like that, or 1,000. Like those are investing levels, time frames, and holding for like a long time, bro. 6 months. Like I'm not even looking in that region whatsoever. So I'm looking at swing trading versus day trading stuff. To me, day trading is the way to do it because, and you can hold overnight if you want, but the predictability of swing trading is no more nor greater than the day trading. So I'd rather have higher frequency. If the predictability is the same, let's just do higher frequency then. Fine. Because then we can execute our edge at a higher speed. So the idea here is to win in trading, bro. And I can tell you, thus far it's not been a success. It's really difficult, and I'm looking at like data right now. This is an increment sheet. It goes long 0, short 0, long 1. You can see this is a period of mean reversion, and then it pops. Bam, it goes short 5. I'm like, where the fuck did that come from? Like, how can I predict that 5R? Because that 5R pays 31R. If you double down like that, or if you just get out at 3R, you make 7. I mean, these are huge deals, man. If we can predict any of this shit, we can make money, and I haven't found a way. I haven't found a good way yet that I'm confident enough about. I do need to descale my expectations. I need to go less, but at the same time, I'm striving for some higher predictability, a higher grip on the market, and I'm not getting the grip that I'm seeking. I want more control. Okay, a little bit more than what I'm getting out of the algos that I have is just, I don't know if it's just circumstantial that they're winning, that some of them are winning, some of them are losing. So it's like, it's whatever. So anyways, So that's what I'm doing. Yeah, like look at this. I'll circle this. Do you see that? Like this area? You go down the list and like this area, all those big numbers. I mean, that was a volatile time. If you're betting on price movement, that was great. That was great. Really great. And it happened to be right before the market opens. So, I mean, there's just so many different things to do. And that's why I'm saying, like, I think simplicity is a big deal. I think we need to get to there. And we need to get out of the phase of so much experimentation. And we have to get into the phase of actually throwing out the tools that you don't need. Like, there's so much, man. And that's so hard to do because there's so much useful information. And it's like, we got to just narrow it down. We got to focus a little bit more because that's where we actually make money, I think, is when we just narrow it down to what this is what we're going to do. This is how we're going to do it. There are many like it. There are many other ways to do this. This is what I'm going to be doing. And do it that way, you know? I just think that is a big deal. So, and I've been many, many years of this experimentation phase of just doing so much different trading ideas. And it's got to relax. We have to narrow down the focus. We have to find a system that we actually like the most and kind of just stick with it, I think. So I don't know. I think goal setting is probably important, and I don't really have that. I think we need to set some goals here instead of just wandering. And I've done, the wandering, I've learned a lot in the wandering process, I've learned a lot. Position sizing, emotional systems, just so many different things. And I've found that there's a lot of randomness. I've found that there's not much edge out there, to be honest, that I'm seeing. I'm finding that there is a lot of things that have zero edge, which is pretty cool in its own right. When you test something on the market with 200,000 trades, like, how the hell is it zero? It's almost exactly zero edge. It's kind of amazing. I think that's like proof of the randomness that the market really is. So how can we make money in the markets? I think there are times where we can make money, man. There are. So I just want to conclude the video. This is just a big brainstorming sesh for me. I know it's a little lost, but we gotta be a little smarter. We gotta be a little more strategic in our movements here. And conserve time and be more efficient with our time and be more focused and intentional with our specifically systems that we want, and less experimentation, more focused work on and driving single ideas forward. And I'm trying, but there's just still so many alternative ideas that we need to start narrowing it if we're going to achieve the best system that we can get. So otherwise, it's going to be an assortment of different systems, and I just don't know if I like that idea. I don't know yet. All right. So appreciate it. Peace and harmony. Have a good one. Bye.